Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. It's important to remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss. Past results are not necessarily indicative of future results. With me this week is Lu Shi. She is a dairy market analyst and based out of our Dublin, Ireland office. But this week she's in China for the China Dairy Industry Association annual conference. I've seen live streams or recordings of that conference before, and it looks like a really big conference. Lu, was it a big conference? What is it like?
Yeah, it is a very big conference, though it is organized by a nonprofit association for all every dairy companies. So most of the Chinese dairy manufacturers from what we know very well, like the New Yili, those big companies, Bright Dairy, but also some local dairy companies who are mostly focused on fresh milk products and also baby formulas, and some of the imported ingredient resellers will also have a booth there to try to connect with their clients, as well as some packaging machines sectors. Anyway, anything that is relevant to dairy manufacturing, you could find their contact there. Also, like niche ingredients or enzymes, something like that. So the
And
lecture, sorry.
no. When I've seen the recordings in the past, there's quite a few presentations, and a lot of times there's information in those presentations that I don't see other places. Were you able to catch some of those presentations?
Yeah. So basically, they have two sectors. One sector for exhibitions. Companies will demonstrate their new products at the exhibition center, and on the other building, there is also conference center. So there were some very interesting reports that I want to share with you guys today. Um, so that presentation was mostly done by a professor from China Agricultural University. They have initiated a dairy technology, dairy farming technology research institute to do some farm level economic analysis, but also how to manage a farm, those kind of technical researches. So we have directly collaborated with a lot of dairy farms to collect data about their production per cow, their dairy cow inventory, and also they work with dairy manufacturing companies, survey about their operation situation, this year's turnover, and also how much homemade powder is produced, so that give more suggestion about how dairy farmers could adjust to this new market situation, and finally make this dairy farming industry more sustainable in growing and meet the demand properly. So my sharing today will cover three parts. First, it's milk production by their research, and second, it's dairy farm things, and the third, it's consumption. That is combined both from that report and also by some talking with people, either they are reseller or end user, but they are directly involved in this imported ingredient business. So about milk production, I will talk about just oversupply situation, because I think that is not an old story, but everybody knows that there was oversupply in the past few years, and now it's still going on. It's just how bad it has been. So in this report, they gave some numbers to have a reference. So they said estimated oversupply in 2022 was 3 million tons of fresh milk due to both milk production growth, but also logistic disruptions. If you still remember that time when China was still under lockdown restrictions. And in 2023, because the lifted restrictions, so most of the consumption recovered, and logistic at least not blocked. So that year, overproduction of fresh milk is estimated at 2 million tons, so less than 2022 level. But we know that in 2024, milk production is still growing at roughly 5% in Q1. And according to their daily surveyed numbers, they forecasted oversupply for 2024 will be also around 3 million tons. That will be higher than 2023, but we should also consider that a lot of oversupplied fresh milk were produced into whole milk powder, and then it was actually consumed in 2023. So we can see that current stock pressure could be still at a similar or slightly heavier level than 2023 because there was any stock going from 2022 to 2023. So that was about milk production thing. And second was dairy farm.
So, question for you, Lou. I'm
Okay.
just trying to do the math on that 3 million tons.
Yeah.
I think that's about 7% of production. Do I have my units right on that?
Yes, or almost if we take just commercial milk.
Yeah. So
Because yeah.
that's a pretty big oversupply.
Mm-hmm.
Okay. All right. I just wanted to make that clear.
Yeah, that's why we have been hearing about a lot of domestic produced whole milk powder, and also if we look at the imported whole milk powder volume, it decreased by around 200,000 tons in 2023 if we compare to pre-2020 levels. Yeah, and also that number is actually matches with the overproduced fresh milk if we convert that volume into whole milk powder. Or we can say a majority of the whole milk powder produced domestically replaced the sales of what was used to be imported whole milk powder. And now from people's feedback, domestic stock of imported whole milk powder was actually relatively low because the resellers are not so sure about how the domestic milk will going, and still they're facing very low price competition from domestic milk, domestically produced whole milk. The price gap currently is around 1,200 euro per ton. That is huge difference.
It's 1,200 euros a ton cheaper for domestically produced whole milk powder.
Yes, compared with imported, because market still appreciated imported whole milk powder more than domestically. And some of the end users, they said either because of taste or quality concern, they are actually still stick to imported whole milk powder. I think that also explains if we look at the rolling 12 months imported whole milk powder volume, it was actually stabilized at around 450 tons per year since March 2025. That is why I have been argued that I know that we keep hearing about how cheap the domestic homemade powder is, and we see a pile of like a mountain pile of domestic homemade powder in staying in their warehouse. But from end users um, perspective, there are still a lot of loyal, sorry, loyal end users. They prefer imported homemade powder.
Okay. Well, that's bad news for the import outlook. But you said you wanted to touch on the farm economics?
I think our calculated farm level margin are quite in line with what shared by the professor. I'm not going to talk more about the farm economics, but the situation of the destocking process of the dairy farm. So according to their monitored data, though they only monitored around 7% of national dairy herd, so those I think should cover both medium size and smaller size dairy farms. In 2023, it already decreased by 7% in herd size. Um, and among those, the farms with less than 3,000 head decreased by more. So the destocking process is already in place, but that didn't make up the expansion by leading dairy farming companies. Like we've shared in the quarterly webinar last month, that number one dairy farming company, they produced 27% more milk in 2023, and they are listed companies, so they have they have more capital support to make them go through this hard time. So the expectation is that smaller size dairy farm won't um, be able to sustain. And some of the optimistic outlook is that they will exit their business after this production season. So probably we need to pay more attention to news about dairy herd slaughtering at end of the Q3, because that is the end of this production season, and then see how it goes, and probably we will have a clearer picture for next year.
That's interesting. Yeah, we'll have to keep an eye on that. That the production growth could slow down significantly in the fourth quarter, depending on how many farm exits we get.
Yeah. And the suggested herd structure is also quite different from if we take Irish dairy farm as a reference. They only need 15 to 20% of heifer to keep the herd size stable. But the suggested herd size is actually 40% heifer. I don't know, maybe like a different manage level of the cow mortality rate, something like that. So probably for China market, it needs a higher heifer to just keep a stable herd size.
Yeah, that makes sense. We've seen it in the U.S. that the share of heifers relative to the size of the dairy herd has been trending down, and certainly there's a number of different things that are factoring into that, like the high price of beef and breedings, some of the dairy cows with beef genetics. But there's also an argument that the farms that aren't as good at managing cows have gone out of business, and the farms that remain are better at handling the cows, better at keeping the cows healthy, and therefore we're seeing less turnover in the U.S. dairy herd because we have better managers that can keep the cows healthy. In the past, the management wasn't as good, and the cows would go to slaughter a little bit earlier. So it makes sense to me that as Chinese dairy farms are still expanding and evolving and learning those management techniques, that the number of heifers they have to hold is probably higher than what we'd see in the U.S. or in Ireland.
Yeah. So then now the listed dairy companies, herd structure sounds less horrifying.
Yeah, yeah, we've talked about that in my quarterly webinars that some of the big
Yeah,
dairy companies were holding a lot of heifers, and it made it seem like they were
yeah.
still expanding. But maybe you're saying they're holding more just because they have a higher turnover rate.
So the last part, I think that is very also very interesting. It's consumption. Um, until last quarterly webinar sharing, the reporting number of 2023 uh, dairy turnover, it's up 2.3. But currently, it seems though we hear some different numbers from different companies, I totally understand that. For example, the consulting company like Nielsen, they only cover retail channel, but in China, not like European market who has a very mature and long time dairy consumption tradition. So majority of the dairy will consumed through retail channel. But in China, food service like bakeries, restaurants, fast food chain take a bigger part for the dairy consumption. So according to Nelson, retail sales is declining in multiple categories, including liquid milk decreased by 2.2 a year over year in 2023. And also we heard, especially ambient yogurt, this category is declining a lot by I think 6%, and infant formula decreased by even more, by 14% in 2023 after the 6% drop in 2022. So that will have a bigger impact for categories like homemade powder and skin because many applications of homemade powder in China are just yogurt and milk drink, ice cream, condensed milk. Um, Yes, and so far, at least in Eastern China, the we it hasn't experiencing very long-lasting heat waves yet. So ice cream consumption is not so good so far. For skin, mostly in baby formula and non-dairy creamer. Those are for like milk tea. Um, so the decline of baby formula will drag the overall demand for skim. But I know that traveling and recreation relevant categories like bubble tea, food service channel demand is still doing okay in volume term.
Those percentage changes from Nielsen, do you know if those are volume or value?
The liquid milk by decreased by 2.2 was volume. Instant formula was revenue.
Okay. Yeah, because I know the CPI for dairy products in China is down 1 to 2% from year ago levels. So it
Mm-hmm.
would make sense to me that the sales in um, currency terms or in would be down something like that. But it's surprising that it's down 2.3% on a volume basis. I did have one other question. Like, I've read numerous articles about the coffee market in China. Starbucks still expanding. Some of the domestic players, Luckin Coffee,
Yeah.
expanding aggressively, adding thousands of new stores
Yes.
a year. And in the U.S., we put quite a bit of milk into our coffee. I'm wondering if you've been to some of the local coffee shops in China and whether they use milk as an ingredient.
Yes, and also in China market, the most popular coffee type is also like latte. So they use milk, but most of the coffee shop now use fresh milk. Yeah, just like you said, coffee chain has been good. That's why like other dairy relevant categories like bakery is also doing okay. It's just the volume is growing, but they are also facing more competition. Some even said that because real estate industry is not doing good, so real estate relevant industries like furnitures or yeah, they are not so good. So the owners of those furniture companies, they also joined the battle for some categories still growing, like bakeries, to compete in this slower growing business. That's why CPI got some negative numbers.
Interesting. Well, it still sounds pretty bearish from China. Still, production's growing. There's an oversupply. Domestically produced whole milk powder is very cheap, and at least the retail consumption numbers aren't sounding so good. Is there any last piece of positivity that we can take away from this?
I think it's like food service, bakery, those categories growing in volume basis, then it will still be supportive to demand for like butter, AMS, and cheese, those higher value added products. Yeah, and at the conferences, they also have some technical um, communication, and I can see a lot of company are aiming to do more for elders um, milk powder. That category is growing very well, and it also makes sense because we are having a bigger population of elderly people, and some special nutrition, so that will help to promote like special ingredients like WPC, WPI for either sports or elderly special nutrition healthcare.
Well, that is a positive note to leave it on. Thank you for your time today, Lou. The StoneX Dairy team spans the US, EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. This communication is issued in the United States by FCM division of StoneX Financial Inc., SFI, by the SFI presenters noted. And the material should be construed as the solicitation of trading strategies and / or services provided by SFI. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange traded and over-the-counter derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA, SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10 1821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier Registration No. P00000 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. Stone X Financial T. Limited, Co. Reg. No. 201,130,598 RSFP holds a capital market services license and is regulated by Monetary Authority of Singapore Massive for dealing in exchange-traded derivatives contracts, OTC derivatives contracts and spot foreign exchange contracts for the purposes of leveraged foreign exchange trading. Stone X Financial HK Limited C. No. BCQ 152-HK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. Stone X Group Inc. acts as agent for SFL in New York with respect to its payment services business. Stone X Financial T. Limited acts as agent for SFL in Singapore with respect to its payment services business. Trading swaps and over-the-counter derivatives, exchange-traded derivatives and options and securities involve substantial risk and is not suitable for all investors. These materials represent the opinions and viewpoints of the author and do not necessarily reflect the viewpoints and trading strategies employed by the FCM division of SFI, or SXM. These materials represent the opinions and viewpoints of the author and do not necessarily reflect the viewpoints and trading strategies employed by the FCM division of SFI, or SXM. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any derivative or security. It does not take into account your particular investment objectives, financial situation, or needs and does not create a binding obligation on any of the Stone X Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. SFP may distribute analysis/report produced by its respective foreign affiliates within the Stone X Group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. The analysis/report is only permitted to be distributed in Singapore to a person who is an accredited investor, expert investor, or an institutional investor as defined under Section 4A of the Securities Futures Act Singapore. Recipients should contact SFP at 65-6309-1000 for any matters arising from or in connection with the analysis or report distributed. No part of this material may be copied, photocopied, or duplicated in any form by any means or redistributed without the prior written consent of Stone X Group Inc. Copyright 2024 Stone X Group Inc. All rights reserved.